The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the February 20th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. You know, the empowering beliefs I want to start with today are what I call the three forces of life. The three forces of life are knowledge, time, and effort. Force number one is knowledge. Today, most of us will have 3 meals and maybe even a few snacks. We'll feed our body. But the question is, have we fed our mind? Question, on average, how much money do you think folks spend a day on, things like, a Starbucks, or sodas, or candy, or cigarettes, or snacks, or things like that? You think maybe $5, $10, $15? How about setting aside, say, $10, maybe $15 a day as an educational fund for your mind? For things like books, for seminars, for videos, newsletters. That way, you get a constant flow of ideas and inspiration. Remember, the best money spent is the money spent to cultivate the genius of your own mind. Feed your mind, folks, at least 30 minutes a day. The money is a small price for the promise of unlimited potential. Force number two in life is what I consider to be time. Because knowledge takes time, and time, well, it's simply irreplaceable. Now, there are 2 ways to acquire knowledge. We can do it by trial and error, or we can hire a coach, someone who can teach us shortcuts, someone that can compress decades into days. I don't know about you, but I've done the trial and error thing far too often. And in the end, even though I thought beforehand it might save me money, in the end, it always cost me more in both time and money. I don't do that anymore. And I would never ask you to do something that I don't do out there. Just wouldn't do it. And I can tell you, in fact, the whole reason why I'm here today, I hired the best coaches money could buy, and then I took what they taught me, and I made it better. That's how life works, folks. Force number 2 in life, it's time. Force number 3 is effort. Now, there's a huge difference between casual learning and serious learning. And effort is the investment that will open up the floodgates of ideas. If you put in the effort, light bulbs will go off. Remember, folks, always spend the money, the time, and the effort to achieve your outcomes. These are the investments that will turn on the lights, sharpen your focus, and start turning your wishes of wealth into reality. Let's go check out the reality of the market here right now. Dow trading down 20 points, trading out at 16,020. S&P off 2 at 1826. NASDAQ down 4 points, trading out at 4233. Russell 2000 is slightly green. It's up 60 cents, trading at 1149. NASDAQ off 5 points, trading at 3648. The New York Stock Exchange off 9 points out here. Goldilocks back $4, trading at 1316. Silver off 11 cents, trading at 2173. Light sweet crude back 27 cents. Natural gas back 7 pennies. Trading out at a little over $6, $6.07. Our call-in number is 877-927-6648. If you give us a call, be happy to take a look at your stock chart. Where do we begin the day? I'd say let's go check out the index. Let's take a look at the S&P 500. Let's go see what it is doing, what it did do, where we're at, where it's going. The whole 9 yards. Yesterday, big old key reversal session out here as we saw the S&P go ahead, test and reject the swing point high that was out here from the trading session of January 15th. The high of that candle is 1848, never got up there. I'm sorry, the high of that candle was 1850.84, never made it all the way up there. You got a key reversal session out here inside of the S&P. Bear separating line. Let me just refresh my script, make sure I've got everything out here. Bear separating line, the whole kit and caboodle inside of the S&P 500 out here. That is the most bearish of candle signals. I didn't even realize there was a bear separating line until I just took a look at it here right now. I take a look at candlesticks from a strength standpoint in a number of different ways. When I take a look at candlesticks, sometimes I'm taking a look at the size of a candle. That's one way. And then I'm also taking a look at reversal patterns out here. And yesterday was a wide-ranging bar reversal to the downside, and it was a bear separating line. It doesn't get any more bearish than that, quite frankly. So now it's the bears' opportunity to see what it is that they can do with the market. So we'll see what happens. Likely a retracement here of the pattern if you just simply come from the swing point low of February 5th. That low was at 1737.92 all the way to the session up here. The high of yesterday, that's at 1847.50. Your dead cat bounce, your .382 retracement, that will take you to about 1805.64. The logical spot would be 1779. That's your .618 retracement. We just simply would need to assess volume on a day-by-day basis if, in fact, that is the move that is made inside of the market. But you had a rejection of a swing point yesterday. You were testing that swing point on light volume on February the 18th out here, and you got a extremely bearish, just as bullish as this bull separating line was, or very close to a bull separating line that we saw here back on February 6th. Guess what? You got just the opposite at the top of the market. So that's really setting up a consolidating pattern, potentially a consolidation pattern here inside of the S&P 500. So you want to spot those consolidation patterns as soon as you possibly can, because they are sometimes difficult to make money in. If we take a look at the Dow, let's go see what the Dow did yesterday. The Dow making a high, getting up towards that .786 retracement level. 16,225 was its intra-session high. 16,268 would have been the .786 level. The Dow here could actually be forming an A to B equals CD to the downside here. Question is going to be what happens with regard to volume. Now, if we take a look, actually, let's do this here. Let's use the actual swing point high. Let's just change this around here. Let's just do this. Give me a moment. I'm going to get rid of the, because I was using the January 22nd level. Let's just come to the all-time high back here on December 31st. That was at the 16,588 level. So now, didn't make it to the .786 level. Now, what's going to be key here for the Dow, what's going to give us a signal here in the Dow, in my opinion, is how this candle session gets handled. Let's just draw the lines across the screen. So we've got the body of the Dow, February 14th. I'm just going to use the body of the candle. It's really the essence of price. We're going to use a black line here, horizontal lines, to use as our benchmarks, because inside of the Dow, which is a weaker index, right, than the S&P as far as retracements, certainly much weaker than the NDX 100. So let's pay attention to what the Dow, what the message of the Dow is. So when you have a little wide-ranging bar like this, you're looking for confirmation that price wants to move higher. One of those confirmations would be what's referred to as the rising three candle formation inside of the Dow. And that means if you were to get a close above the close of February 14th, I'm just looking for that number. Sorry for that pause there. 16,154.39. That's the number you want to be paying attention to. If you were to see a close above that today, that's actually a bullish rising three candle formation, because as long as price travels with inside the body of this candle out here inside of the Dow, it's really not providing you with much information. It's just simply, a bit of a pullback out here. So that's really that's the candle formation that we're seeing here inside the Dow. Now this morning, you can see we had price come down and test the bottom of the, which is really the body of that candle from February 14th. That's at 16,018. Hey, just because it's rejecting it right now doesn't mean anything. But this is what you want to be paying attention to for a continuation of this pattern for the Dow in order to it to move higher out there. That's the Dow pattern. If we take a look at the XAU, if we take a look at the gold sector out here, the mining sector. You had a nice key reversal session here yesterday. That means that you'd like to see follow through if, in fact, the miners are going to pull back to the downside out here. The 200-day exponential moving average is what it's trading into and or around. That level is actually at 100.14. You're above that at 100.86. So it says the mining stocks out here are doing pretty well this morning. If we take a look at the NDX 100. NDX 100 yesterday having a bearish separating line candle as well. So as bearish candles go, that's about as bearish as you can get after making its 1.272 or very close to the 1.272 expansion on February the 18th out here. Now, we don't have the same kind of candle session as we have in the Dow to be focused on or paying attention to. Inside of the NDX, if there's going to be some type of pullback, if we take a look at coming off of the February 5th low to the high out here on February 18th, you're going to see the dead cat bounce about 35.83, the 0.618 retracement 35.20. And as I'm actually pulling up the next index, I do want to say thank you to the over 300 folks that have already downloaded my special report about major market tops and bottoms out there. If you haven't had a chance to do it, get yourself over to the homepage of TFNN.com. Do it right now. Download this report. This is going to be one that you want to keep in your archives out there, and it's one that is very time sensitive as well with regard to what's going on inside the market. So that's on the homepage of TFNN.com. You'll see it over on the left-hand side out there. But thank you to all who have already downloaded that report. Now, let's take a look at the Russell 2000. Russell 2000 makes a 0.786 retracement the last 2 days as it was dealing with the 1160 number out here. It is possible that it's forming an A to B equals CD down. If it is, if we see some follow through to the downside here this morning, the A to B equals CD down inside of the Russell 2000, that would take you down to about the 1064-ish range out here. And that's what's going on there. Yesterday you had a key reversal session inside of the Russell. So that sets up your resistance here. You got resistance in a couple of areas. If you take a look at resistance inside of the Russell, you've got the downdraft gap. That took place at the open on January 24th. That's the red line now going across my screen. That price number is 64.77. Didn't get up and tag that area yesterday, but you can see that is truly resistance. If you get above, well, in this case here, I would say in order for the Russell to reverse that pattern, it needs to close inside 1166.67 out there. Right now, trading out 1152. If we take a look at the semiconductor index here, if you take a look at yesterday, and this is so. If you're looking for strength inside a market, this is it. The strength is right here. Because if you take a look at yesterday's session, barely a budge out here. In fact, yesterday's session, the prior session inside the SOX, the close was at, 560.48. And yesterday's close was 560.02. Yeah, there's, I know we took a look at Intel yesterday, and Intel itself is weak. But the rest of the sector looks up. PDS. There you go. Pretty darn strong out here. It's not showing it's any signs of weakness, at least not as of yet out here. And that is on the SOX. 877-927-6648. Dow's off 23. S&P is up 2 points. And we'll be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, and thanks. 6 folks during the last 5 minutes, a little bit more than that commercial break that we just had out there, but 6 new folks downloading my special report on major market tops and bottoms out there. Thanks so much for doing that. We were taking a look at the stocks before we went to break. Let's keep looking at the rest of the indexes that we've got here. Let's take a look at the New York Stock Exchange out here. New York Stock Exchange, right now still traveling with inside the swing point from October 11, 2007. If it trades below 10,195.58, it will have rejected that swing point. Pretty large swing point. That's the red lines going across my screen. That is the October swing point. Went from, on one trading session, went from a 10, and this was as it was making its high out here, folks, went from 10,195 to 10,387 out there. So it was about a 190-point move inside of the New York Stock Exchange. That's pretty big as it was making its last flurry out there on October 11th, 2007. Bearish candle, most certainly yesterday. What it was doing, it was closing the gap that was formed out here from January 22nd to the session on January 23rd, so mission accomplished there. But from a bullish or bearish side, if I take a look right now, You've got net advancing issues, 287. Let me see here if I can open up my spreadsheet. 1,989 net declining issues is what would be needed for the bears to fully take control of the marketplace, and we don't have that here as we speak right now. But it is a doable thing out there. So that's on the New York Stock Exchange. This looks to be, we'll just say right now the key area to be paying attention to on the New York Stock Exchange is going to be the 10,195.58 and net declining issues in this case here. You continue with net declining issues, then it's a matter of is it going to push the price oscillator down to the zero level, and that could be the end of the move on the way down, or is it going to get down below the zero level? But right now, I can tell you, and I didn't update the charts. I've got to update that manually with my spreadsheet data. But what I can tell you is the price oscillator, I'm just looking at the spreadsheet right now, so that way I know exactly what's going on. That price oscillator got up to a level of where is it? About 212 is the number. And price oscillators getting up to that level typically are indications of they're indications of liquidity in the marketplace. They're indications of a market that wants to move higher. It doesn't mean that it moves higher here right now, but just means that we ought to be back up at these levels, even on a correction, even on a decent correction out here. So that's inside the New York Stock Exchange. Let's take a look at what other index, because I'm going kind of in an order here. The NASDAQ Composite. Let's take a look at the composite. The key here, for me, the key this week is whether or not the NASDAQ Composite closes inside 43.2226, and right now you're trading out at 42.44, so it's back inside that range. The key is going to be tomorrow at the close at 4 o'clock out here. 43.2226 is the number out there to be paying attention to, and that really goes, I don't recall if I included that chart in the special report or not, the weekly chart there. Maybe we'll have to send out a follow-up report if I didn't. So we covered all the indexes. Well, let's go. We were taking. I mentioned the word liquidity. So let's go take a look at the index that helps us to monitor liquidity or lack thereof, and that would be the VIX index. The VIX index here right now is at 1517. It is trading above the 50-day exponential moving average. The exponential moving average right now at 1493. So it's really just slightly above it. Anytime the VIX is above that level, it is an indication of a lack of liquidity inside of the market. So we've got two signals here, we have two signals that are opposed at this point to each other. You've got the VIX index above the 50-day. That says, liquidity not so great. And then you've got the price oscillator inside the McClellan summation index. In essence, that's really the tool that pushes the summation index up or down out there, and that's saying, hey, liquidity not too shabby out there. So you got a little bit of divergence. If we take a look at what's going on inside the ETF structures out here, let's take a look at the Qs. Now the Qs here, they do have that signature of making highs with light volume, and they did that on the trading session here of February 18th. 29 million shares as that high was being made, just as an example out here, and I may sneeze. I'm going to try to hold it back out there. Of course, I do say better out than in, but I don't really feel like sneezing in your ear. In any event here, January 22nd, 29 million shares. So 29 million shares on the 22nd of January as it made a high. 29 million shares on February 18th as it made a high. Something to think about. Highs are made inside the Qs with light volume. Hey, how about that little doji out here on December 9th? I made this little high out there with 22 million shares. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target and stop price of each stock in option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 57 points right now. S&P is up 6. Composite up 14. Russell 2000 is the leader in the clubhouse percentage-wise, up 0.5%, up $6 and change out there. Let's continue looking at the ETF structure out here. So we had the Qs. We were taking a look at it, noticing that it had made that high volume, that low volume high out there, a signature of the Qs. So until that high gets taken out of 90.42 out there, the signal here is maybe a slow roll to the downside. Volume so far inside the Qs today, 12 million shares in an hour of trading. We only made 29 million shares, only did 29 million shares on the entire trading session 2 days ago on Tuesday, on February 18th. Let's go take a look at the other ETF structures. Let's look at the SPYs here, see what the SPYs did yesterday. SPYs themselves also having a key reversal session as they were testing the swing point here from January 15th. So the SPYs get above the January 15th swing point, which was 184.94. Now that had 98 million shares. Yesterday, you get above it. You do it with 126 million shares. So the question is always, are you pushing the high with volume, or are you pushing lower with volume out there? And I won't really know until the day plays out, quite frankly. We do know that price, if we take a look at an intraday chart, the volume was really moving to the downside after about the 2 o'clock time frame inside of the SPY. Nonetheless, resistance here now inside of the SPY is in place. That's going to be yesterday's high at 184.95. You're trading at 183.72 as we speak right now. Volume so far today, 33 million shares. Yesterday was 126. So volume, not too shabby in the first hour of trading. The IWM, the Russell 2000. Russell 2000 here is, as I say, is the leader in the clubhouse percentage-wise to the upside right now, up about 0.5%. If we take a look at the Russell 2000, or the IWM, I should say, we'll see that it made the 0.786 retracement yesterday, having a key reversal session. That says that inside the IWM, you say key reversal session 3 times in a row fast. In any event, that says that the February 19th, yesterday's high at 115.64, 115.64, is really the resistance area inside of the IWM. So this could be forming an A to B equals CD to the downside. We had volume yesterday. Volume, no matter what, yesterday was a failure of the at the swing downdraft from January 24th. That had 57 million shares. So yesterday, even if it was pushing higher, 44 million shares, and then they rejected that higher price out there. Let's take a look at the last ETF, the DIA, the diamonds out here. The diamonds here yesterday also having a key reversal session out here. Now, it had, it did 8 point, we'll take a look, no, I won't do it right now. 8.2 million shares is what it did. Again, the key here, let me get rid of the potential A to B equals CD down, because it's really inside the diamonds, in my opinion, that really gives us the next signal out here. So we took a look at the Dow. You can do the same thing here with the diamonds, although I think it's better with the Dow. But if we take a look at the diamonds here, we're using the session from February 14th, so Friday's session out here. We're drawing a black line across. Oops, that wasn't a black line, was it? Let's try that again. There we go. Draw a black line across the actual body of the candle, and the key is going to be which way does price break and close, not just test, but actually break and close out there inside of the body session of February 20th. If, in fact, you see the diamonds close above 161.59, it'll be a continuation move to the upside. Now, the clearance that it needs to get above in order to do that is going to be yesterday's high as well. But if you do see it close above 161.59 out there, it says, okay, ready for its next move higher out there. Likewise, if it cannot do that, that would actually... and then we'll start to see a move downward. So that's really the key session here. And at this stage, there's no information to tell us anything other than we're just having a little bit of a sideways move inside of the market. If we take a look here at, let's look at the commodities. Didn't get a chance to look at silver in the last hour, but we'll take a look at silver here in just a moment. As far as gold, it's traveling out at $13.14. It's off about $6 right now out here on any kind of pullback. The levels you're looking at are $12.96. That's your dead cat bounce, your .382 retracement, and $12.73 is your .618 retracement inside of Goldilocks. We'll see if we can get any kind of pullback into either of those two levels out here. If we look at silver here, silver still running into resistance of that 200-day exponential moving average, so we want to keep our eye on that number. That's a number that all kinds of trading desks are going to be focused on as well. That is at $21.93. You're at $21.72 right now. You get a close above that, that's going to be lighting up screens. I don't care if it's overbought or not. That's going to be lighting up trading desks all around. You'll see a move to 22.67 PDQ. And the question is going to be what happens up at that level. The real resistance here inside of silver, probably right here at the top of this little evening star formation from September 19th, 2013, out at 23.44 out here in the marketplace. But right now you got resistance at the 200-day exponential moving average, $21.93. A quick look at the light sweet crude out here. It is trading sideways after having a nice wide-ranging bar 2 trading sessions ago. 103.07 is the number. We can see that light sweet crude also bumped its head yesterday into the top of the rising price channel out here. So today, just moving sideways, working off an overbought condition out here, and that's actually a bullish sign to work off an overbought condition and only work sideways. Maybe that's what happens inside light sweet crude. It continues to move sideways here for a few sessions to work out that condition, and that would actually be bullish as we take a look at Japanese candlestick charting. We take a look at the 30-year Treasury. You got the 30-year Treasury here moving lower. The question is, are we beginning to see an A to B equals CD down? That would be forming inside the 30-year Treasury. If we do that, that A to B equals CD down is going to take us into about the 130.26 to 129.32 level out here. Let me see what kind of retracement the 30-year Treasury has done at this stage here. 30-year Treasury, oh boy, a perfect 0.618 retracement. And that would say, yeah, right, this would be forming a Gartley buy pattern on the 30-year Treasury. We'll go ahead and we'll draw that in on the screen here. Here's where you're, I just missed it, didn't I? Here's what I really like to do, and that is get all these Fibonacci numbers lined up. That gives you your better range out here. There we go. So here's the Gartley buy pattern that would look to be setting up inside of the 30-year. It'll take you right down. I think I got it. There we go. Let me get rid of the Fibonacci levels and the formation tool, and it'll be just clean it up just a tad bit. There we go. So there's basically your 0.618 retracement down into that 130.17, 130.27-ish range inside of the 30-year Treasury. And at the moment, that's the pattern that would appear to be unfolding. If we take a look at natural gas out here, natural gas trading out at about $5.94. That is looking at what? That's still looking at the March contract. I probably need to switch over. If I need to switch over to the the April contract. Nonetheless, let's just keep it short and sweet and simple out here inside of the natural gas. I've got a 30-minute chart up on my screen. 30-minute chart is suggesting here an A to B equals CD down. Of course, we haven't seen one of these, an A to B equals CD down pattern unfold for some time. This could be the one that is unfolding here as we speak right now. That would take natural gas down to about 574. Again, that's a 30-minute chart that we are looking at. Let's take a look at retracement levels, see if there's a Gartley buy pattern that would be setting up here. And there most certainly is. That would be, give me a moment to just do a couple other fib expansions. I just want to take a look at these and then set up the pattern properly. So I would say based on the way that this has expanded to the upside, the trade that would look pretty enticing perhaps is right around here, right around the $5.68 type mark out there. Of course, you need to get a reversal signal inside. This is taking a look at the March contract for natural gas out here. And that would set up your, approximately a 0.618-ish type Gartley buy pattern inside of natural gas. Let's take a look at what's going on around the world out here right now as we take a look at the DAX now is down 63. The FTSE actually has turned green, slightly green out here. Let's take a look at the DAX. We have not looked at the DAX here for quite some time. Here's a monthly chart for the DAX. The DAX here formed a bearish engulfing candle last month, is not having any kind of follow through. Now, this is after forming really a 1.272 butterfly pattern here. Even though it's trading just slightly above, it hasn't really taken it out enough to say that this pattern here has failed. But what we did have occur, now we've obviously got, another 5, 6.5 trading sessions left in the month out here, I believe. Poor David White, he doesn't get a birthday this year. It's February, and his birthday's, not until February 29th. That's really a bummer to have your birth. Well, I don't know if it's a bummer or not. Maybe there's the positive side of that is he's younger than all of us because he only has a birthday once every 4 years, right? So not actually, I would take that. I would take that. In any event, I digress. Let's take a look at the DAX. Month is not over here, but what you want to see on any kind of a bearish reversal signal is follow through. And you're not seeing that here in the DAX, even though it's trading off about 65 points here this morning. It's still not confirming the bearish engulfing candle from the month of January. What does that say? That says, you know what, if it can't take that out, it would say the DAX wants to actually travel up and make the 1.618 expansion. I know you're asking me where is that number. I'm going to give that to you here in just a moment. So if the DAX is able to take out the highs out here from last month, January, the high there is 97.94. It's going to want to make a beeline for about 10,939 out there, and that is on the DAX. If we take a look at that would then form a 1.618 butterfly expansion. We just simply use our this is our measuring stick, our rulers, these retracements and these expansions out here. If we take a look at the FTSE. The FTSE here still trying to get above the 2007 high. So the FTSE, just like our New York Stock Exchange. So here's an index that has not been able to breach the 2007 area. It's trying to do it here this month as we speak. That 2007 area, the high out there, is back at the level of 67.54.10. Let me make sure that is the high. 67.54.10 is the number. You are trading at 68.01 right now. And that is a weekly chart that we're looking at inside of the FTSE. Let's change this down to a daily. Let me see what we have going on out here in the daily charts. Daily charts not giving me a whole lot of information at the moment out here. Just really a consolidation pattern. Really, the message here inside of the FTSE. So actually, I take that back. There's quite a bit of information. Let's clean this chart up. There we go. Let's just clean it up. What we can see here inside the FTSE is a nice little consolidation pattern. And I'm just going to take the smaller consolidation, even though you could probably take it back a little bit further. But here's our clear consolidation pattern inside of the FTSE. And now this is going to be important. So I'm really coming back to about October 14th, 2013. That's going to be the bottom of the consolidation, the top of the consolidation that we would use probably right about here. So you're looking at a range from, let's use 6,400 just to make the math easy. 6,400 to 6,800. So you got a 400-point consolidation. If in fact the FTSE, so therefore on that monthly chart or the weekly chart that we were looking at, so you got. Let me just write it down so I don't have to do the math here the next time around. So we got about a 400-point consolidation, and that says, if the FTSE is able to take out those 2007 highs, just so you've got a price projection here, what you ought to see as its move, and again, taking out those highs are going to be clearing and getting above, at this stage, 68.67. You get above 68.67, and what you're looking at is probably about 72.50 or so would be the move inside of the FTSE out there. And you might want to take a look and find an ETF for the FTSE if, in fact, that is the pattern that would unfold out there. Let's say, as long as we're in this sector here, let's take a look at the other charts. We got the Hang Seng. If we take a look at the Hang Seng here, this is a monthly chart. Monthly chart for the Hang Seng coming back to the 2009 lows. You got a nice little rising price channel. That rising price channel here during this month is being tested. So far, this thing has held out here, and that is actually somewhat bullish inside of the Hang Seng. Now, it has not been able to. It's really kind of in this little. If you take a look at the midpoint, it's a red dashed line that's going across my screen. That's really acting as resistance. So inside of the Hang Seng, if it's able to bounce from here and maintain that rising price channel, probably says it wants to travel up to about the 25,008-ish range, 880, 850, somewhere perhaps right around that level. So the Hang Seng chart on the monthly basis looking not too bad. The Shanghai out here, the Shanghai had formed a 0.618 Gartley buy pattern. If we take a look at it right now, see what kind of retracement it has done off of the high from September 12th down to the low that was put in here on January 21st. We'll see that what the Shanghai has done is made the 0.618 retracement. No bearish candle session here for it yesterday, and it was really relatively unchanged from the prior day's closed out here. So the Hang Seng may want to make a move to its next level, 23.14.10. Right now, we've got the Dow is up 60 points. The S&P is up 6. NASDAQ up 13. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 58 points. S&P is up 5. Let's go out to Spokane, Washington, to our man Ron. Ron, thanks for calling. Thanks for holding. How are you today?
Doing well, Steve. How are you?
Excellent. Thanks so much for asking.
I'd like
Go ahead.
I'd like to see what you think about GPL. I've been in it several times, and it, made a move, but I don't know. It's gone down a lot from where it used to be, so I'm not sure what to think about this stock.
Okay, great. Now, when was the last time that what's your time frame that you're looking for? as far as your time horizon for trading or investing inside of Great Panther?
Couple of months.
Couple of months. Okay. So, and can I ask, when was the most recent time that you were inside the equity?
Oh gosh, it's been.
Okay, so it hasn't been the past month or two.
No.
Okay.
No.
Okay, great. Okay, so if we take a look at Great Panther, this thing came off of the bottom with really nice volume here. The trading session on February 7th, this thing went from a low of 82, went all the way up and tested its, made its 100% move, its swing point, which was the swing point from August 27th. 2 million shares up there at the $1.34 level. And the nice thing, Ron, is it came in there with 2.7 million shares, 3.2 million shares, both on the 14th and the 18th. So that's the good news, is that the Great Panther Silver will be back up at those levels. The question is, where is the retracement? Now, so is your question, hey, what do I think about it? Or the question, where do I get in?
Where do I get in? Where do you think it's going?
Long term, where I think it's going is all the way back up to the highs of $5. Here, I'll show you something, since you were kind enough to call in. Great Panther Silver is one of those equities that has a untested high volume high, and now it's a large swing point on the monthly chart. It goes from $3.55 to $5.04. If you're buying something for your kids or your grandkids or what have you, I'd tell you to take some of that money. I'd say go ahead and buy Great Panther Silver, and I would say stick it in a drawer. Now, the drawer would also have a sell price, a target, and I would have to say, get out at about, I would first take a look at 355 as the number. Now, that's the longer-term horizon. I don't know how long it takes to get up there, but that is actually the long-term target for Great Panther Silver. With regard to how you trade a stock that is a dollar stock, $1.23, something like that, like ideally, this thing will make a decent retracement, a normal retracement on this. Yesterday's session was one where we saw some volume come out of it, 2.8 million shares out here. And so the question is Great Panther going to come all the way back to its breakout area, which is around the 84-cent level? One way for you to take a look at this, Ron, would be to have a trading strategy to scale into it. And that scale in area could be like at the dollar. You could take a portion, a third at $1, a third at 90 cents, and maybe a third at 80 cents, something like that. 80, 90, and $1. Well, it might be one way for you to trade this. But I think long term, and the way that this thing came off of its bottoms, the way that it attacked its swing point out here back in August, the August 27 swing point, it's all really good signs for Great Panther Silver.
Very good. So you think we're coming on down below $1, so
I don't know. I'd say I don't know if it's going to pull all the way back there. Obviously, it would be a nice trade if it did, especially if it comes back on light volume. If it comes back on light volume to 90 cents to $1, I think you probably should be all over it.
Cool. Thank you.
Alrighty. Hey, you bet. Thanks so much for calling. Folks, stay tuned. Basil Chapman is up next. It is Terrific Thursday. That means we got our man Larry Pesavento, then Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show, the entire lineup. Have a great Thursday, folks. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.